Welcome back to the channel. In this video, I'm going to talk about the key elements of a financial projections for a service-based business. So if you run a service-based business and you're looking to plan out the next few years of your finances, this video is specifically for you. These projections are just numbers. They're not just numbers. They're a roadmap for your success. And in this video, I'll give you a guide of what to include to create the best financial projections and the tools you'll need to get started. So let's jump in. Right? Key elements of financial projections for service-based businesses. First, let's talk about the core elements of the financial projections. Here's what you'll need to include in any financial projection when presenting to investors, the bank, or stakeholders. Okay. Number one, revenue projections. How much money do you expect to make? For service businesses, this depends on a couple factors like what's your hourly rate, how many number of clients you plan on servicing, how many service packages you have, and how many employees you might have to fulfill those service packages and number of hours and number of clients that you have. Okay. Number two, cost of goods sold. So for service businesses, there's usually direct costs involved. Think about supplies, subcontractor fees, employees, tools required to deliver your service. Okay. These are the cost of goods sold. And then there's number three, operating expenses. This includes anything from rent, utilities, software subscriptions, marketing costs, and salaries. Number four, cash flow projections. I've done a lot of videos on this. This is when you will get paid and when the money will go out. They're not always at the same time. Almost never are they at the same time. This is critical to ensuring that you can cover your expenses while you're waiting for invoices to clear. Number five, profit and loss statement. This shows whether you made money or you're losing money over any given period of time. And number six, a break-even analysis. This tells you the minimum amount of revenue you'll need to cover your costs. It's a great way to understand your financial baseline. Okay, so at minimum, you want to include those things in your financial projections for your service-based business. Again, revenue projections, cost of goods sold, operating expenses, cash flow projections, profit and loss statement, and a break-even analysis. Okay, so now a step-by-step guide to how to create your financial projections. So let's break it down. Estimate your revenue. Start by listing all of your services and pricing them and estimating the number of jobs or the number of clients that you're going to get or that you can handle per month. Okay, that's the key. That's as simple as it gets when it comes to estimating your revenue, right? So I charge $7.99 for an SBA business plan. I charge $9.50 for a pitch deck. I think I can get 10 clients for my business plan business. Okay, that's $7,990. And I think I can get 10 clients for my pitch deck business. Okay, that's $9,950. That's how you estimate revenue. It's really that simple. Okay, don't overthink it, guys. Number two, calculate direct costs. Think about any expenses directly tied to your service, such as tools, software, and materials. So let's say, for example, I was paying somebody to write the business plan for me. And every business plan I charge $7.99 for, I pay someone $500 to do it. So I sold 10 of them. Now I have to pay $500 for somebody to write it. 500 times 10, that's 5,000. Okay, those are my direct costs. Okay, so anything directly associated with that business line, right? The next thing you're going to do is calculate and list and categorize your operating expenses. This breaks down into categories, operating expenses like marketing, administrative, operational costs, rent. You can use historical data if you're an established business. If you're a startup business, ask somebody else that has that kind of business, or Ask AI is a great tip in 2024, 2025, or find a public company that has the data out there or market research out there. So for example, I have rent, I have an office, right? $1,300 a month. That's a fixed cost. That's an operating expense. I have marketing costs of almost $3,000 to $5,000 a month. That's a fixed cost. Doesn't matter how many business plans I sell or how many pitch decks I develop, that cost is going to be there. You want to list and categorize all of your operating expenses. Number four, forecasting your cash flow. Map it out. When will you receive the payments and when will you need to pay your bills, right? So I know a lot of my bills come on the first, right? Meanwhile, my payments from my business plan clients come over the course of the month, right? So understanding this, I understand, hey, look, no matter what happens on the first, I got to pay some bills, right? So I got to make sure that money. So if on the 26th, that invoice hasn't cleared from that client and that money's not in the account, I may have to take out a bridge loan to pay the rent and then pay back the bridge loan after my client pays the invoice, right? So keep that in mind. Cash flow is super important to forecast out because again, you don't make money at the same time that you spend it. And if you're spending it before you're making it, you're negative cash flow. If you're making it before you're spending it, you're positive cash flow. You're all good. That's the optimal position you want to make your business in. And then prepare a break even analysis. Determine how much revenue you need to cover your expenses, right? So add up all of your operating expenses for the month, my office, my marketing. Okay, $5,000, let's say it cost me to, rent my office and do my marketing and have my subscriptions online. Great. Do I need to sell $5,000 worth of business plans to break even? Well, don't forget the direct cost, right? We just talked about that. So I have to sell more than $5,000, right? Because remember, I was paying somebody $500 in my hypothetical situation to write the business plan. So now I got to sell almost $10,000 worth of business plans because I got to give $5,000 to the guy writing it, which leads me to $4,000, $4,900, something like that. And that would be my break even scenario. So keep that in mind. Determine how much revenue you need to cover your expenses. This is essential to making sure that you're not lying to yourself. Because if I told you, hey, I make $10,000 a month writing business plans, sounds great, right? But if I have $5,000 in expenses on direct costs and $5,000 in expenses on operating costs, that means I literally made no money after I made $10,000, right? So I know that if $10,000 is my break even, everything over $10,000 is going to be where I start making money. Okay. So common challenges and how to overcome them. Of course, financial projections aren't without challenges. Here are some common ones and how to handle them, right? Fluctuating demand is one. For service businesses, demand can be very seasonal, right? And due to market conditions. Use historical data and industry research to forecast conservatively. I have a tip and a trick that I use with all my financial projections, which is overestimate your costs and underestimate your revenue, right? If you still show up profitable, you're probably in a good boat. But I deal with fluctuating demand all the time, right? On Christmas Day, I'm not getting any calls, right? On At midnight, I'm not getting any calls. On Thanksgiving Day, I'm not getting any calls. The first week of New Year's, right? That first week of January, I get a lot of calls. A lot of people with their New Year's resolutions, they want to start a business, they want to get going. The same thing happens almost towards the end, the last 4 or 5 days of the year. People that said that they wanted to start the business that year and they realize the new year's coming and they haven't done it yet, all of a sudden now they want to get into it. So that's fluctuating demand, right? A landscaping business could have fluctuating demand where they see more revenue in the summer, more demand in the summer than they do in the winter. Same thing with the pool cleaning business, right? So make sure you're accounting for fluctuating demand. The next thing is variable costs. Costs like travel and supplies, right? If I'm printing out my business plans and mailing them, well, that's a variable cost. It doesn't always exist. It only exists the more as I sell a business plan. The more business plans I sell, the more costs there are for printing the business plan. So this may change month to month. So always have a cushion in your financial projections to account for variable costs. And then realistic assumptions, right? It's easy to be overly optimistic, but investors and lenders will appreciate you being conservative, right? So if I say, hey, I'm going to be a business plan writer and I'm going to service every single small business in the United States, well, I'm probably being overly optimistic, right? Not everyone in the United States needs a business plan. And not every startup business or established business needs a business plan. So it's probably better that I'm conservative here, right? So what's conservative? Is it 10% of all the businesses? Is it only 10% of the startup businesses? Is it only 10% of the startup businesses in Connecticut or in New England or in a certain region, right? This is up to you to determine based on your market research and your past experience. And by the way, nothing beats past experience, right? So the faster you can get into your business and start working it and use that data to project out into the future, the better you're going to be. I remember when I first started my business, I wrote a detailed business plan. And by the way, a business plan is a working document, right? Financial projections are a working document. You're going to adjust them as you're moving forward in your business plan. But what I realized is that the data that I had after the first few years allowed me to make better assumptions, right? I started realizing, Craigslist works really well when I put up, $500 worth of ads instead of $100 worth of ads. And when I layer that with Google, it works really well. Oh, my Facebook marketing is not working so well. And after about 3 years, I had a system in place where I saw, okay, for every dollar of marketing I put into Craigslist, I was getting a $10 return, right? So I knew that bumping up that marketing budget should give me a bump in revenue. Now, if I'm being conservative, do I say, because my past data showed for every $1, I'm getting $10 back. If I'm projecting out, it would be easy for me to say, hey, look, let's add another $1,000, and for that $1,000, for every $1, I'm getting 10. But in the financial projections, I said, for every $1, let's get 5, because you don't really know, right? Just because you're increasing the budget doesn't mean it's going to operate the same way it does in the past. So always err on the side of caution and be more conservative, okay? So some tools and resources to simplify the process, right? Excel templates. That's one of my favorite. There's plenty of free and paid templates in Excel for service-based businesses. Use them. Even if you don't need funding, it's great to have financial projections so you can kind of forecast and set a benchmark, set a goal of something that you're aiming at, right? As a famous quote says, if you have nowhere to go, then any road will take you there, right? Have a target, know where you're going, try to get there. Excel templates are a great way to start that. Financial projection software. So QuickBooks, LivePlan, these two platforms, and now there's a ton of other ones with AI and SaaS out here that are creating financial projection software. Play with these things, see where they are, see what it takes if you adjust, your marketing budget, or if you adjust your cost, what would happen, or if you increase your number of employees, what would happen to your cash flow, what would happen to your break-even analysis, right? These are great tools. And then, as always, I always recommend, if those things are not for you, or if you're too busy, or like many of the smartest CEOs I've ever met, understand that there's somebody better out there for you. Hire a professional consultant, right? Someone that's already in the business of doing financial projections, as am I. So if you need help, please feel free to reach out to me, okay? So to wrap up, financial projections are the foundation of a strong business plan. By including the key elements that we talked about and using the right tools, you can create a financial projections that guide your business and guide your success. If you need more help, please reach out to me. If you found this video helpful, give it a thumbs up, subscribe to the channel, leave a comment below on any questions. I answer all the questions in the comment section. And if you have any stories you'd like to share, please put them in the comment section as well. And check out my website for more templates and my services. Hope this video was helpful. I'll see you guys on the next round.